Hi, I'm Chad Huebener.
And I'm Sara Huebener with Edina Realty, and today we are going to be giving a brief update on COVID-19 and the real estate market. In our previous video, we talked a little bit about what was going on with the real estate market, particularly as it relates to business not as usual, and some of those things are still unchanged. For example, the mortgage industry is still fully functional, and title companies are still performing closings by separating buyers and sellers in separate locations.
So as far as our everyday business, the first thing we want to talk about is inventory. As you would expect, inventory is dropping. There are less people putting their homes on the market. People are still signing listings. There are still listings going to come, but it has slowed down quite a bit. So we are seeing inventory levels drop. There is still a buyer demand. So as we know, we have shot some videos on all of our listings, and people are looking at them. They're more like virtual showings, virtual open houses, but there still is a buyer demand out there.
Now, with the decline of the inventory, we've also seen some of the showing traffic drop off. And what's so important about that, or perhaps what makes it not such a scary thing, is that normally in Minnesota we will see a lot of buyers in the spring come out who are contemplating making a move, but they don't really have to. That makes up a lot of the showings in springtime in Minnesota. We are still seeing serious buyers who need to buy or sell due to needing a larger home, a smaller home, finding a home that's closer to work, job relocations, divorce. All sorts of factors come into play for what motivates people to buy or sell, and those things are still happening even with the pandemic. I mean, life goes on, and so we do still have a lot of those showings occurring. With the virtual showings that are taking place, some of the showings that are occurring are not physical showings at the property per se, but people who are ready, willing, and able to buy a home are still looking. Another thing just to mention here is that we are seeing some of the iBuyers pulling out of the marketplace. You're probably familiar with the term iBuyers. There's Zillow offers, there's Open Door. A lot of those national for-profit home buying platforms are actually temporarily suspending their purchases of homes, and so that's important too, because that ultimately does have an effect on our inventory. And then lastly, we do want to mention a discussion that is going around regarding whether or not we are heading for a housing crash similar to 2008. We have a lot of area experts and leadership that have worked exclusively on tackling this subject, and they have put together a few talking points which we would like to share with you. First of all, mortgage standards are higher today than they were in 2008. Not only are they higher now than they were in 2008, they are getting even tighter still, with lenders requiring more perfect, for lack of a better, higher credit scores. Yes. Also, price appreciation in the past 6 years has been moderate versus the soaring prices that we saw in 2007, 2008. Those were unrealistic gains in appreciation. Also, in that peak of the market, 2006-07, we had a surplus of inventory. We do not have that now. We have an inventory shortage. So that is a huge factor in the pricing that is affecting the market. And then also we have a discussion surrounding affordability. In 2006 and 2007, prices were high and mortgage rates were high. Now the prices are still high, but the mortgage rates are half of what they were at the height of the market. And so for that reason, homeowners are putting far fewer dollars into their housing than they were during the housing crash. And then lastly, in the 2008 time period, a lot of people were tapping equity out of their homes, similar to an ATM, to finance things like cars and vacations. And from a national level, we are seeing significantly lower trends of that occurring. So at this point, our industry experts are not seeing a housing crash similar to 2008. So hopefully that leaves you with some comfort. Thank you for watching our video today, and if we can answer any questions for you moving forward, please let us know.